You were listening to chartingwealth.com for Tuesday, the 3rd of July, 2018. It is a shortened trading day on Tuesday, and then the markets will be closed for Independence Day. Please enjoy yourselves, wave the flag, and have a great holiday for Independence Day. But in the meantime, let's jump into these markets. And by the way, for all of our subscribers, we did publish over the weekend our special quarterly chart review. If you have not received it or you missed it in your email, we're putting a link into today's email that will take you to that quarterly chart review. If you're not familiar with what the quarterly chart is all about, it is a beautiful thing. We have found, and again, when you read our book, Charting Your Way to Wealth, you will read about time frames and how they work for certain stocks and certain ETFs at certain times of the year or all the time for certain periods over time. What we have found for 20 years now, over 20 years, as far back as we can go on our charts with the quarterly chart on the S&P 500, we have found that it gets you into and out of the market at very opportune times, the Trump effect, and then what's been going on lately, and some cautionary warnings. But again, we want you to understand the quarterly chart, and we have that special training if you are not already signed up for our daily reviews and receiving, basically subscribing to us and receiving every day our daily market review, and once a week our comprehensive review and forecast. Also, all of our special trainings come out there. The quarterly is only released to our subscribers, and in order to get that, you need to subscribe. If you're already a subscriber, look in today's mail. You will actually see the download that we put out there for you, the special training on the quarterly chart. Please watch it, enjoy it, listen to it. We'll do the next one in another 3 months. It'll be the third quarter. We just finished the second quarter. So let's jump into these charts today. We look at a very long set of weekly movement as this market has just moved up, moved up, moved up. And what we see happening now as we really sort of peel back and take a look at where we are, we can see the market looks like it peaked back. I mean, when we go all the way back on the S&P 500, somewhere in January, this is again on the weekly chart on the S&P 500, then we had that big blow-off that occurred that week of February, that first week in February. Well, let's see. It's actually the second week in February. Then the market sort of went sideways and then dropped and has tried to gain some more traction, but it started dropping again. And what do we see happening as this week starts off? We're going into our third week of down movement, and we see things looking like they're crossing over, going down. Now, this is just first day of this week-long candle, and again, it's a shortened week, but it looks like we're trying to penetrate with the price percent oscillator, the red signal line. Derivative oscillator's been losing energy since it peaked on the week ending June the 15th. So again, we'll continue to watch and see what we see. We're not calling a weekly vertical crossover going down yet, but it sure looks like it's in the works, but then things could pop up. But we'll just continue to watch. We see that, of course, the 2-day chart rotated over going down back on the 2-day candle ending on Monday, the 25th of June. And we have a pretty solid trend line of down movement. Derivative oscillator gaining energy, price percent oscillator headed down. Market was up for the day on Monday. And we do see the 4-hour chart trying to cross over going up, down in the morning. And again, these are Heikin Ashi candlesticks. They're calculated differently. Be one of the 77,000 plus people who has taken our training. We're top rated on Google and on YouTube in particular with that training. Please look up Heikin Ashi, Heiken -ASHI. Heikin Ashi means average pace in Japanese. It's a kind of candlestick that we like. It's actually measured differently than your typical candlestick of high, open, low, close. This is calculated in a different way, and it helps us see the average pace of things. So we see down movement in the morning. We see basically a doji of up movement in the afternoon. Derivative oscillator gaining energy. Price percent oscillator crossing over, going up on that 4-hour candle. But again, what we see is the candle itself is that a lot of indecision. It's pretty much a doji, but tending up. So we'll see how the morning, what we see going on in the morning. Remember, price movement still below that 2-day trend line. So we'll just continue to watch, see what we see. That's what's going on in the S&P 500. Onto the Qs, up 0.67% for the day. Qs is not as close to crossing over going down as the S&P 500. Remember, the Qs is the NASDAQ 100, the tech stocks. Does appear to be going into a second week of some solid down movement, at least one candle, one day into the 5-day candle, or this week actually shortened 3.5 days worth of candle movement. Derivative oscillator losing momentum, price percent oscillator headed down on the weekly. We go to the 2-day. Of course, it crossed over going down back on Monday the 25th, that 2-day candle ending then. Then the following two-day candles, so 4 more days of down movement. And then so far, what we see happening on the first day of this latest 2-day candle is a green spinning top, means indecision, tending up. However, derivative oscillator gaining downward momentum, price percent oscillator still headed down. Not at the same angle it had been. It paired that off a little bit. We'll continue to watch that. And what do we see on the 4-hour chart? It's trying to cross over going up. Derivative oscillator did move over going up in the morning, even with that down Heiken Ashi candlestick. And again, even the afternoon candlestick, some weakness with a down wick on it, but it did have a nice long wick on the top. And again, not an extreme box of up movement, but we do see some up movement. We'll keep our eye on things. We don't have a trade at this point because, of course, we have the weekly moving in the down direction, and we have the 2-day chart continuing to move in the down direction. But what we see, of course, is that we have that attempted crossover going on the 4-hour chart. So again, of course, we're still in a confirmed up move on that weekly chart because it's not crossed over going down yet. Remember, we don't call a crossover until a crossover actually occurs. So we've got that schizophrenia between the 2-day and the weekly. We don't have a trade there. So just keep watching. We did have a great trade when we had that weekly vertical crossover going up back on the 1st of June. Ran for about 2 more weeks. That was beautiful. And we'll just wait until the market sets itself back up again for a good move. We won't get greedy, won't get stupid. What do we see going on TLT 20-year bonds? Down for the day 0.30%. However, Heiken Ashi candle shows the average pace is some up movement. Again, just pretty much within the range of where things were over the prior week. We see the derivative oscillator gaining momentum, price percent oscillator headed up. Remember, we're in a confirmed up movement on that weekly chart. We look at the 2-day chart. It's also in a confirmed up movement. The latest 2 2-day candles, the one ending on the 27th and then on the 29th of June, those were strong up moving candles. This first day of this latest candle is a red spinning top, again indicative of some of the down movement that we saw during the day. That, of course, means means indecision tending down, and of course that movement contained well within the prior green candle. Not a strong start for the week. We look at the 4-hour chart, and of course it is crossing over going down. So if you had jumped in and ridden that up a little bit on those 2 candles of up movement on the 2-hour chart, then of course you need to be careful staying in at this point, because at the end of the day you did have a crossover going down on that 4-hour chart. As we talked about, some concerns about things topping off over the course of this last week. Lastly, we will go to gold, which was down a full % for the day. Now, gold, of course, has been going down in earnest since we saw a big red down candle back on April the 27th. Has continued to go down, and the candles for the last 3 weeks have just gotten bigger as things have continued to accelerate down. Price percent oscillator gaining downward momentum. The derivative oscillator gaining downward momentum. As we look at the 2-day chart, what do we see there? Of course, again, stair steps down, derivative oscillator, price percent oscillator heading down strongly. What do we see on the 4-hour chart? Look like it might give us a pullback there. We had two green up candles and then strong down movement in the morning and the afternoon. So gold just continues to trundle down. How long will gold go down and where might it stop? Well, if we start trying to look for places where it stopped before, about where we are on this 4-hour chart, somewhere around the 117 mark or so. If we range out a little bit to the 2-day, what do we see there? Well, we can see, yep, about the 217.50, 117.50, forgive me, I don't know why I'm putting a 2 in there. That's the 2-day chart. We go out to the weekly, and when we start tracing that back, again, we can see, we can see somewhere around that 117.50 mark, and then, of course, the next point somewhere around the 115.48. We'll just continue to watch. I mean, again, we'll see where gold is going to settle to. We look at the 4-hour chart, and of course, it is continuing to move down. The weekly charts continue to move down strongly, and of course, this 4-hour chart continues even after that bump up on Friday, started again Monday with down movement. So we'll continue to watch. Everything in gold is again pointing to more down movement. We'll just see where it stops and if we can find a jumping in point for a down play on gold. Folks, that's where we are as we end the day on Monday. I want to give you a heads up at the end of the week. We're going to do some traveling out west to the Grand Canyon and environs, and it will be difficult for a couple of days for us to get our broadcasts out due to the remoteness of where we'll be. We'll be trying our best to get that information out to you. We'll keep you updated. Should be able to knock out the weekend broadcast this weekend, getting you ready with a comprehensive review and forecast for the following week. Monday and Tuesday, we're a little up in the air as to where we're going to be and how good a signal we'll have, but we'll try our best. And again, check out on your email tonight. You will see the link for all of our subscribers to the quarterly review, and also the links there to order the book, Charting Your Way to Wealth. Remember, we've got a special broadcast. We're going to a special training on the 2-hour short chart. If you're interested in short chart training, the best way to get that training is to buy our book, Charting Your Way to Wealth. And we're going to provide that to everyone who has purchased the book with a special training on it mid-month, around the 15th of July. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.